understandable and indeed appropriate. The issue of terror finance is a serious one, and Coinbase and crypto offer, I think, an important model or opportunity for governments to partner to thwart these types of financial activities. I think it's unfortunate, Arjun, that politicians in the United States and perhaps elsewhere sometimes take advantage of these terrible tragedies that occur all over the world to focus on particular sectors or particular industries. The reality is that the vast majority of terror financing that takes place globally takes place outside of crypto in traditional financial services, and it's important that every industry, every participant fulfill its responsibilities to keep these illegal organizations off of their systems.
And just on that broader topic of regulation in regards to the cryptocurrency industry, you praised MiCA earlier on and the European Union's approach to it. Do you feel that regulatory clarity in the US is any closer?
Well, we are making progress. It may be progress that is slower than I would like or that Coinbase would like as a company, but the fact of the matter is we're now seeing in court cases real questions being asked about the U.S. approach to crypto regulation, and in particular securities regulation. Judge after judge is asking serious questions about the SEC's interpretation of our U.S. securities laws and, frankly, challenging some fundamental points that the SEC has pressed on whether tokens are securities at all, or whether or not there are more robust tests that need to be applied when evaluating securities transactions. MiCA, on the other hand, I think offers a not quite perfect model. There are issues, to be sure, but a more, I think, substantial and serious approach to crypto regulation in that it isn't caught up with the jurisdictional fights, the turf battles that we have in the United States over whether particular transactions are securities transactions or commodities transactions. Instead, the focus is on keeping consumers and investors safe.
It's been a fascinating year in that, if we just look at price, for example, we've seen Bitcoin do very well. But we've seen volumes on exchanges, including Coinbase, still remain low, indicating perhaps that the retail trader hasn't quite come back in at this point as well. Do you think there's a whole generation of retail investors who just got burnt really badly in some of the debacles, quite frankly, we saw last year and won't really return to the market? Or are you optimistic at this point that you will see these volumes come back?
Well, I'm quite encouraged and quite optimistic that a number of the bad actors in this space are being held to account through criminal trials and through aggressive regulatory actions that really are critical to inspiring confidence, not just in the retail sector, but in all sectors that may be interested in crypto. We are quite excited that there are a number of developments we think that are just around the corner or underway even as we speak that will bring back investor and consumer interest in crypto. For example, we think it's quite positive that the U.S. Court of Appeals rejected the SEC's rationale when it turned away Grayscale's request to offer a Bitcoin ETF. We think that other ETFs are going to be coming online soon enough as the SEC follows the law and is required to apply the law in a neutral way to the applications that are pending. We think there are obviously new products and services to service the Web3 and on-chain markets that will draw further interest in crypto that have really little or nothing to do with speculating on the value of the assets, and are much more about utility. So there's a lot to be excited about in crypto. It may be taking longer than some of us would like, but we do think the future is bright.